You're exhausted, like deep down in your bones tired. You did everything the system asked of you. You went to school, you got married, and you both landed solid jobs. Combined, you were pulling in well over $100,000 a year. By all traditional metrics, you should be wealthy, or at least comfortable. But you're not. You are living paycheck to paycheck on two incomes, and every single month you sit at the kitchen table staring at your bank app, wondering where the hell all the money goes. You feel like you're doing something wrong, like you are failing. Most people think families are struggling financially because of poor discipline. They blame it on the avocado toast, or buying the new iPhone, or having too many streaming subscriptions. They think it's a budgeting problem. But the math proves it is actually the exact opposite. Your budget isn't the problem. The second income is the problem. Getting that second job actually made you poorer. Which sounds completely insane, I know. I mean, I am Heisenbank, and I literally look at numbers all day for a living. When I first ran the math on this for the channel, I genuinely thought my spreadsheet was broken. But it wasn't. The numbers don't lie. Today, we are breaking down the exact mechanism of the Elizabeth Warren two-income trap. We are going to look at the brutal reality of the cost of living crisis 2026, and I am going to show you exactly why dual income versus single income is the biggest financial illusion of our generation. Because once you see the hidden costs of working, you will stop blaming yourself for feeling broke. And more importantly, you can actually figure out how to escape the treadmill. Let's rewind for a second. Back in the 1970s, the average family had one breadwinner. Mom stayed home, dad worked, or vice versa. Then society shifted. Women entered the workforce in massive numbers. This was a massive win for equality. But economically, it created a terrifying side effect. Suddenly, the average household had twice the earning power. So what did families do with all that extra cash? Did they save it? Did they work half as much? No. Of course not. They wanted the best for their kids, so they tried to buy houses in the best school districts. But because every other family suddenly had two incomes as well, they just started outbidding each other. We didn't get richer, we just handed all that extra money straight to the banks and real estate agents. We permanently doubled the price of admission to the middle class. Today, a decent house in a safe neighborhood requires two incomes just to qualify for the mortgage. The system absorbed the second paycheck entirely. But that's just the macro level. Let's look at your actual bank account, because this is where the math gets genuinely depressing. Let's look at the hidden costs of working. Say you make $70,000 a year. Your partner stays home with the kid, but money is tight. So your partner goes out and gets a job making $50,000 a year. You think, awesome, we have $50,000 extra dollars. Wrong. Because you are married filing jointly, that new $50,000 is stacked on top of your $70,000. It gets taxed at your highest marginal rate. State and federal taxes plus Social Security instantly vaporize about $15,000 of that. You are left with $35,000. Now, childcare costs and inflation. In 2026, putting a toddler in decent full-time daycare is easily $22,000 a year. Poof, gone. You are down to $13,000. But wait, your partner needs a way to get to work. That means a second car. Car payment, insurance, gas, maintenance, that averages $8,000 a year. You now have $5,000 left. And because you are both working 40 hours a week plus commuting, you are totally exhausted. Nobody wants to cook on a Tuesday night at 7 p.m., so you order takeout twice a week. You pay for grocery delivery. You buy pre-chopped vegetables. We call this the convenience tax. That eats up easily another $3,000 a year. You are left with $2,000. Your partner just worked 2,000 hours this year to net $2,000. They are working for $1 an hour. Let that sink in. You completely disrupted your family's life, handed your kid to a stranger for 10 hours a day, and exhausted your marriage for $1 an hour. And here's the truly terrifying part of why two-income households are broke. People think having two incomes makes you safer. If one person loses their job, you have a backup, right? No, because of what we talked about in segment 1. You bought a house and cars that require both incomes to maintain. In the old days, a single-income family had a built-in safety net. If dad got laid off, mom could go pick up shifts at a local store to keep the lights on. They had a reserve of unmonetized labor sitting at home. You don't have that. Your entire lifestyle is balanced on a knife's edge. Both of you are maxed out. If one of you gets sick, if one of you gets laid off, if your kid gets the flu and can't go to daycare for a week, meaning someone has to miss work, the whole house of cards collapses. You don't have 2 safety nets. You have 2 points of failure. So why do we do it? If the math is this terrible, why do we keep running on the wheel? Because of human psychology. We are obsessed with status. We want the optics of success. We want the 2 shiny cars in the driveway. We want the vacations we can post on Instagram. And when you are working yourself to the bone, you feel entitled to those things. You say to yourself, I work 50 hours a week. I deserve this nice car. Or we never see each other. We deserve this expensive dinner. It's a dopamine loop. You work a job you hate to buy things you don't need to soothe the stress of the job you hate. The second income isn't building wealth. It is funding the coping mechanisms required to sustain the second income. And let's be totally honest about who actually benefits from this setup. It's not you. Corporations love the 2-income trap because when everyone needs 2 incomes just to survive, everyone is desperate. And desperate employees don't negotiate hard. Desperate employees don't go on strike. Desperate employees answer emails at 10 p.m. because they're terrified of missing a mortgage payment. You are trapped in a system that extracts your labor, taxes your income, and sells your own children's care back to you at a premium. Look, if hearing this makes you a little angry, good, you should be, because the financial industry relies on you staying confused and exhausted. They want you blaming yourself. If you want the actual numbers to fight back, if you want to understand how the machine actually works so you can start dismantling it in your own life, hit the subscribe button. We don't do fluff here, we do math, and we prove our feelings with numbers. And things are only getting tighter. Look at the cost of living right now. Inflation didn't just hit flat-screen TVs, it hit the non-negotiables: housing, healthcare, and education. You can't skip buying groceries. You can't just choose to not pay property taxes. When Elizabeth Warren first wrote about this concept in the early 2000s, it was a warning. In 2026, it's just the grim reality. The gap between what we earn and what it costs to simply exist has widened so much that dual incomes are no longer a luxury path to wealth. They are bare minimum survival tactics. But they are highly inefficient survival tactics because of the tax brackets and the hidden costs we calculated earlier. Every extra dollar you earn gets shredded before it hits your savings account. So, how do you get out? You have to do something that feels like stepping backwards. You have to ruthlessly audit your fixed costs. The trap only works because your baseline expenses expanded to consume both paychecks. To escape, you have to decouple your lifestyle from that second income. Maybe that means selling the house and moving to a slightly worse school district. I know, that sounds horrible. But what's worse, a slightly older school building? Or parents who are too stressed and exhausted to actually raise their kids? Maybe it means selling the second car and figuring out how to commute with one, or working opposite shifts. It means doing the terrifying math on your own life. Sit down tonight. Take the lower of your 2 incomes, subtract the taxes, subtract the daycare, subtract the extra gas, the work clothes, the convenience meals. Look at the actual net profit of that second job. If it's only a few $100 a month, you need to ask yourself a really hard question. Is the stress worth it? Could you cut a few $100s out of your budget by having the time to cook at home, by not needing the second car? For a lot of families, stepping down to a single income or one full-time and one strictly part-time job actually results in a higher quality of life, and sometimes, bizarrely, more actual money left over at the end of the month. You have to stop trying to out-earn a system that was specifically designed to absorb every single extra dollar you make. You cannot outwork the 2-income trap. You can only step outside of it. You need to move from survival mode into empowerment. Stop looking at your gross income and start looking at your net life. Because true wealth isn't a high combined salary that immediately vanishes to fund the infrastructure of your own exhaustion. True wealth is margin. It's having the time, the energy, and the financial breathing room to actually experience the life you are working so hard to build. Seneca once said, "It is not the man who has too little, but the man who craves more that is poor." I am Heisenbank. See you on the next one.